Good morning, everyone, and welcome to How AgriStability Works. My name is Delane Manziak, and I'm the Verification Manager here with AgriStability. I have over 24 years of experience in the ag industry. I've worked in the ag chem and ag seed business, and most recently here with Saskatchewan Crop Insurance. I also grain farm with my husband in the Kelleher area, and we've been doing that for, well over 25 years, I guess. So joining me today is Ray Greneveld, and I will let Ray introduce himself.
Good morning, everyone. I hope you can hear me all right. I am in the same room here with Delane, so I'm using her microphone, just you're getting my video feed here, but I'm Ray Greneveld. I am the Manager of Policy, Program Development, and Readiness for AgriStability with the Saskatchewan Crop Insurance Corporation. Been in this role for about 2.5 years now, but I've worked for SCIC for 10 years. And prior to that, I've been involved in the ag industry from a journalism perspective and have a background of working and being raised on a mixed feedlot grain farm operation out of southern Alberta. So we're excited to be here today to talk to you a little bit more about AgriStability, how the program works, how some of the things function within inside AgriStability, and give you a little more insight. This has been a goal of ours to try and help provide some more information on this program, to not make it so mysterious, to try and break down some of the barriers to the challenges that have been recognized with the program. So we hope today's session will help you out with that.
So we are scheduled for an hour here today, but the presentation itself will take likely just over a half an hour. So you're welcome to ask questions during the presentation. So if you're interested in doing that, you can put your hand up and our moderator will unmute your mics, and then you can verbally ask your question. Or if you're more comfortable typing your question into the Q&A box, you can do that as well. And we can either answer those questions in the text box, or we can verbally answer those questions as well for you. So whichever you're more comfortable with. So I'm sure at some point you've asked yourself one or both of these questions. What happens when poor markets take away from your margin, or if disaster hits? Well, we're glad you asked. That's what AgriStability is for. So what we'll cover here today is why you would want to participate in the AgriStability program, how you would enroll in AgriStability, how AgriStability works. So we'll go through some of the details around that, and also how a calculation of a benefit happens. So why AgriStability? Saskatchewan farmers and ranchers may want to consider participating in the AgriStability program for one or for many reasons. So farmers cannot control the weather or the markets or the input costs, but they can manage these risks through the AgriStability program. AgriStability is affordable protection for a whole farm operation coverage. The program fee is low cost, and payments do not affect future fees to participate. The fees are based on your reference margin, which I will explain reference margins here in a few minutes. And for every $100,000 of reference margin, you'll pay $315. So there's an additional administration fee of $55 as well. So for a farm with a $500,000 reference margin, the annual fee to participate would be $1,575 plus the $55 administration fee. So it's quite a reasonable amount to participate in the program. AgriStability also provides financial support to help offset large margin declines. So when your farm is in a disaster situation, AgriStability may provide a benefit to you. It provides personal coverage based on your own farm's history. So every one of your operations is unique and looked at individually. It also provides access to other credit options and programs. So AgriStability can be used as security for the cash advance program, and banks will often request your calculation of benefits for loans or for lines of credit. So who can participate? To be eligible to participate in the program, you must derive income from the primary production of agricultural commodities. You must carry out business of farming in Canada and report farming income or loss to CRA. And you had to have a minimum of 6 months consecutive farming activity, and you must complete a production cycle. So enrolling in AgriStability. Typically, the enrollment deadline each year is April 30th. The deadline to enroll for the 2020 program year was extended from April 30th, 2020 to July 3rd, 2020, and this was due to COVID-19 related impacts. This extension for 2020 was agreed to by federal, provincial, and territorial governments. It allowed producers more time to assess and plan their business risk management strategies for the 2020 year, given the uncertainties with the market disruptions and other COVID-19 related impacts. So producers who requested enrollment for the 2020 program year have until December 31st, 2020 to pay their fee to be able to participate in the program. However, there is a 20% penalty added to the fee amount when the initial deadline has passed, and that initial deadline is 30 days past when you receive your enrollment notice. For the 2019 program, SCIC ended up having 11,327 producers pay their program fee to ensure participation for that year. So this was up from 10,984 producers that paid their fee to participate in 2018. So that's the first year that we've actually seen a bump in participation. For 2020 enrollment numbers, we're still working on finalizing those, but they look to be just around 12,000 producers. So enrolling is simple, and all you have to do is call the AgriStability call center or one of our 21 customer service offices throughout the province. It basically is a 5-minute conversation, and we can gather the information needed to generate an enrollment notice for you, and you'll have taken the first step to participate in the program. So our toll-free line number is on the screen right now, and we will show it at the end of the presentation as well. So participation in AgriStability. As I mentioned, the number of participants that are in AgriStability, so that number has been going down for the last number of years with a bump last year. However, the amount of Saskatchewan, the industry participating in the program has remained steady. So compared to the overall farm cash receipts generated in Saskatchewan, which is the farm revenue generated, AgriStability participants are approximately 51% of the farm cash receipts. And this has remained steady over the last 5 years. So while participants have gone down in size, or the number of participants have gone down, the size of the industry being protected in the program has remained constant. So, we see that as, producers that are, retiring and selling out, and, the producers that are picking up that land are still maintaining their AgriStability participation. In 2019, we saw an increase in the participation, going up by a couple hundred more producers, and we see that happening again this year as well. So benefits paid to producers. Over the last 5 years, so from 2014 to 2018, there's been over $425 million paid out to Saskatchewan producers. So the reasons for these payments: in 2017, there was crop price decline, particularly in the lentils due to market access issues to India. This decline in prices factored into many of our 2017 benefits. West Central Saskatchewan was also affected greatly by dry conditions in 2017, and the reduced crop production factored into benefits as well. In 2016, there was a record drop in the cattle market, and this created over $43 million of benefits to cattle producers in that year. 2018 alone is about $128 million. So it's a really big payout year. Lentil and durum values continued to struggle in 2018, which factored into about 38% of the payments that we've provided for that year. Crop production across southern Saskatchewan was down significantly in 2018, which impacted producers' benefits by about 27% of our benefits. And cattle prices were lower when compared to 2017. So combining that with producers having to reduce herds due to lack of feed and having to purchase more feed, more benefits were generated for the cattle sector in 2018. So about 16% of our benefits were into the cattle sector. The 2019 program year, we're really just started processing those files, and we've already provided about $18 million to that program year. So how AgriStability works. AgriStability compares the current year's financial situation on the farm to the historical financial situation. The financial situation is measured by determining a margin for the farm or ranch. And in AgriStability, we talk about two different margins, the program year margin and the reference margin. So the program year margin is the financial picture on the farm for the current year. And it is compared to the historical financial performance of the farm called the reference margin. So we will show you how these are created. So the program year margin, when we look at your allowable income and expenses, so these come directly from your income tax that you filed to the Canada Revenue Agency. And then we also look at adjustments. So inventory, receivables, payables, and purchased inputs. This information comes from the supplementary forms that you fill out or your form preparer fills out and submits to AgriStability. So when we look at the reference margin takes into account 5 years worth of historical financial information. So we do an Olympic average, which means we exclude the highest year and the lowest years and lowest year, and then we average the remaining 3 years. The program margin is then compared to the reference margin. So when we look at the reference margin on this graph, it's the 5 years that are on the left of the graph, year 1 to 5. And we remove the 2 gray bars, the lowest year and the highest year. And then we average the remaining 3 yellow bars to get the reference margin. So when are you in a benefit situation? So when the program year margin declines by more than 30% of your reference margin, an AgriStability benefit will be triggered. So the payment provides 70 cents on every dollar of decline below the trigger point. So if you can see on the graph where the trigger point is, that's a 30% decline from your reference margin. So for an example, if your reference margin is $300,000, we times that by 70%, which gives you the trigger point of $210,000. So with a program margin of $200,000, you take your trigger point, which is $210,000, and you minus out your program year margin of $200,000, and you get a $10,000 difference. So AgriStability pays 70 cents on the dollar of the difference. So it'll be $10,000 times 70% would equal a $7,000 benefit for this producer. AgriStability benefits are calculated using the lower of either the conventional reference margin, which is what we just explained, which averaging out the 3 years, or the average allowable expenses, which is calculated by using the operation's average allowable expenses for the same 3 years that we used in the conventional reference margin. And that will give us our reference margin limit. So if the allowable expenses are used, the reference margin is limited. So the reference margin limit will never be less than 70% of your conventional reference margin. So if your conventional reference margin is $100,000 and your reference margin limit is $55,000, so since it can never be less than 70% of the conventional reference margin, we would bump that up to $70,000. So the margins used in AgriStability program are based on your farming income and your expenses, which both are directly related to the primary production of agricultural commodities. And then we look at your accrual adjustments. So for the incomes, the allowable income and expenses must be directly related to the primary production of agricultural commodities. And the following table shows the examples of the allowable and non-allowable income and expenses. So your allowable incomes would be any agricultural commodity sales, any wildlife or crop insurance payments that you receive, or any rebates for allowable expenses, as well as any payments from the Canadian Food Inspection Agency. So for 2020's AgriStability program, producers who purchase additional risk management coverage for their farm, such as private hail insurance, GARS or Global Ag Risk, Just Solutions, so they will not have those benefits taken away from their AgriStability benefit calculation. So I'll explain that more a little bit later, but in the past, those payments were allowable income. So it would actually inflate the producer's income and take them further away from a benefit. So in 2020, it was announced that those payments or indemnities that would be received would be removed from your allowable income. So it would help producers, I guess, who are in a benefit situation to receive that benefit. And the expenses that are directly related to the production of your commodities would be commodity purchases, containers and twine, any fertilizer, pesticides that are purchased, your insurance premiums are allowable expenses, vet fees, minerals and salts, gas, oil, diesel, electricity, heating, fuel, storage and drying, freight and shipping, trucking, and any prepared fees, as well as arm's length salaries are considered to be allowable expenses. When we look at the accrual adjustments, what we're looking at is we're measuring the changes in the value of your accounts receivable, accounts payable, purchased inputs, deferrals, or commodity inventories. The inventory adjustment is the difference between the value of the commodity you have on hand at the start of the fiscal year compared to what you have on hand at the end of the fiscal year. Inventory changes are valued using fair market values. Essentially, if the farm's inventory value increases, so it increases in inventory or the value of that inventory increases, it increases the program year margin. If the farm's inventory value decreases, so you have fewer bushels or fewer number of livestock, or the price decreases, it decreases the program year margin. So you can save yourself a lot of work at the end of the year if you record your inventory at year end. And by doing this, you won't have to try to recall or dig up your paperwork to figure out what you had on hand at that time of year. So we do have inventory worksheets on our website to help you if you need that. So to recap margin, we look at the allowable income, we subtract out the allowable expenses, and then we take into consideration any accrual adjustments such as inventory changes, deferrables, receivables, purchased inputs, and payables. So we also look at structure change. And so from time to time, a farming operation may change in size. So this could include expanding acres, reducing acres, or growing something new, or reducing herd size or growing your herd size. So this type of change is called structure change. So when this occurs, the farming operation's income and expenses will be different than what had been in the past or in their historical information. So as a result, the farm's historical reference margin is no longer a good comparison of the current program year. So to provide a more accurate comparison, AgriStability adjusts the farming operations reference margin to reflect the farm size in the program year. So this makes the comparison to the farm as if it was the same size in the historical years as it is in the program year. So it's a more fair comparison for the farm. So triggering a payment with AgriStability. So the whole farm situation is considered when determining a benefit. So benefits can be triggered by one factor or the combination of effects of several factors that on their own may not have triggered a benefit. So an example of this is low yields alone can trigger a benefit, or poor prices can trigger a payment individually. But if your yields are just slightly below what you normally produce and the cost of your inputs go through the roof, this combination could trigger a benefit. That being said, one situation can also offset the benefit as well. So a bumper crop could be offset by the effects of poor commodity prices or increased expenses. Higher cattle prices could offset the increase in feed expenses. So all of these factors are taken into consideration. We'll go through a couple of examples here now of actual farms that submitted their information to Saskatchewan Crop Insurance. So we've adjusted the numbers so that the operations are not recognizable. However, the examples are based on actual farms and their individual AgriStability files. So this producer is 11,000 acres of cropland, and in 2017 they had reduced yields due to dry conditions. So they had to sell their 2016 crop inventory as well as half of their 2017 crop inventory in order to be able to cover their bills. And they also received a $1.2 million crop insurance payment for their production losses. So in this situation, we'll just go through this line by line to, I guess, show you how the benefit is calculated. So you can see for the revenue, we look at their 2016 crop that was sold in 2017 was $3.9 million. Their 2017 crop sales were $790,000, and their crop insurance payment was $1.25 million. So their total revenue was $5.94 million. And their total expenses for their 2017 crop year was $1.8 million. So then we look at their accruals. So their purchased inputs was a difference of $518,000, as well as a change in inventory, which was a drop of $3.35 million. So their program margin is calculated by looking at their total revenue minus their expenses and their accruals. So their program year margin is $272,000. So when we look at calculating their benefit, we look at what their reference margin is. So their historical information averages out to be a reference margin of $1.7 million. And their program year margin that we just calculated is $272,000. So we calculate out their trigger point, which is 70% of their reference margin, and their trigger point comes out to be $1.19 million. So the decline in their program year, we take the trigger point and we subtract out their program year margin, and we get $918,000. So your AgriStability payment is 70 cents on the dollar of the decline. So you take the $918,000 times 70%. This producer received $642,600 from AgriStability. So in this situation, the key payment driver is the accrual adjustment change in inventory. So this producer ended up selling a large amount of their inventory in the farm, which reduced their inventory and has an effect on their margin, as it offset the large amount of income generated for their sales for that year. So there will also be a carryover effect into their 2018 program year. So this producer will start the 2018 program year with, I guess, little beginning inventory. And depending on their production in 2018, the producer may also have lower than normal inventory, which could drive another payment for them in 2018. So the second producer that we'll look at is a cattle producer. And in 2017, they had reduced feed production due to dry conditions. They had to purchase additional feed to make up the shortfall in the 2017 forage production, and they sold the majority of their calves due to the lack of feed and dry conditions. So when we go through the calculating a benefit for this producer, when we look at their revenue, it was generated by their 2016 calf crop sold in 2017 for $465,000. Their 2017 calf crop sales were $400,000. And for their 2017 breeding stock, they actually sold $56,000 worth of breeding stock that year as well, just because they weren't able to feed that. So their total revenue for the year is $921,000, and their expenses for the year were $290,000. So again, the inventory change is what drives this payment. So they had a reduction in inventory value of $556,000. So when we calculate out their program year margin, we look at their total revenue and we subtract out their expenses and their inventory change in their accruals, and we get the $75,000. So when we look at calculating their benefit, this producer's reference margin from their 5 years worth of historical information is an average of $225,000. Their program year margin, which we just calculated, was $75,000. Their trigger point, which is 70% of their reference margin, is $157,500. So the decline in the program year is the trigger point minus the program year margin, which equals $82,500. So their AgriStability payment will be 70 cents on the dollar of the decline. So this producer received $57,750. So again, the change in inventory was the key factor in driving the payment in this situation. The producer having to sell calves they were normally would have retained resulted in the reduction of inventory, and that drove the payment. So despite the increase in income from the sales of those calves. So this will again have an impact in their 2018 program year, as this producer will have a smaller herd size to begin the 2018 program year. So depending on their year and how the producer manages their herd, it could be a factor in a benefit being generated in 2018 as well. So new for AgriStability for 2020. So for the 2020 AgriStability program, producers who purchase additional risk management coverage for their farm will not have those benefits subtracted from their AgriStability calculation. So I mentioned this already, so any private hail insurance that you purchase or GARS, Global Ag Risk Solutions, those indemnities will not be used. So previously, producers who received an indemnity from any of these options would have that amount included in their AgriStability allowable income, which reduced the potential to receive a benefit under the program. So now these indemnities will be removed from the program year calculation, so the producer will not be negatively impacted if they receive an indemnity from a different risk management program. But they will be added in your historical information so that it continues to keep your historical reference margins high. The premiums that producers pay to access this additional risk management coverage are still considered as allowable expenses for AgriStability, so this is a win-win for producers. And this change was announced in January of 2020. So the premiums and indemnities for SCIC's crop insurance programs have not been changed and are considered as allowable for the AgriStability program. So this situation or this scenario just shows basically how in the 2020 program year, the indemnities the producer receives from private hail insurance is not considered as allowable, and this reduces the overall income used in the producer's benefit calculation. So as a result, the producer's potential AgriStability benefit is not affected by having income by using other risk management programs. So here is our call center number. So you can contact our AgriStability call center for more information. Our email address is on here as well. Our offices are open from 8 a.m. to 5 p.m. You can also contact one of our 21 customer service offices. We have the SCIC website address on here, and the AgriStability forms and guides are also on our website, so you can access more information that way. You can also connect to Ray or myself by using the Ag in Motion Discovery Plus. You can send us a connection request, and we can connect there with you as well to answer more questions. Or you can visit the SCIC booth in the Ag in Motion platform as well. And Ray and I are available for questions. So please feel free to connect with either Ray or myself. We'd be glad to have a conversation with you or provide you any additional information. So I'd like to thank you for joining in with us here today, and we hope you enjoy your Ag in Motion experience this year. Thank you.